GM, this is the weekly ledger where I take a look at a high time frame analysis of the market and the week ahead. Let's start off with the market recap. So, here is a spaghetti chart of Bitcoin and various altcoins, and I put it to FOMC. So, this is the reaction to the interest rate cut decision so far. As you can see, Bitcoin, Solana, Ethereum, and some other Bitcoins like SUI, XRP, they're pretty much flat. Seeing some deeper pullbacks in the likes of Pepe and Hype, but overall, what you can see is that crypto market is back where it was when the FOMC rate cut decision was made. So for all the traders who FOMO into longs, even FOMO into shorts on FOMC, we're right back where we started. That's why you don't need to FOMO in to any of these economic events, especially when everyone's expecting a big move. Because, as you guys know, I've been saying this all week, when traders are all expecting volatility, that means they get positioned for it. And if everyone's positioned, what's going to make the market move? The big volatile events happen because people aren't positioned for it. Therefore, the market needs to reprice because people need to get positioned for it. So, quick little rant on what the market's done over the last few days since FOMC, literally back to where the decision was made. So, taking a closer analysis, I've marked out the FOMC low on Wednesday on Bitcoin, ETH, Solana, and Total 3. So, one good sign that we've seen is crypto hasn't taken the low from FOMC. That means price has been unable to take the liquidity, yet it took the short side liquidity off that FOMC candle. So, overall, good to see that crypto hasn't taken that liquidity. It is still in a consolidation. As you can see, this week has just been a consolidation despite, again, all of the emotions, traders losing their mind at the highs over here on Bitcoin, then losing their mind on the dump over here, getting wrecked. It's just been in a sideways consolidation, and we didn't even take the low, which would be very nice to actually hold in the coming days. That would be a show of strength. Obviously, we can sweep that low, but that's going to be really the range that decides the moves in the coming weeks. So, any higher low on Bitcoin and your altcoins above this FOMC low is going to be a sign of strength. And if it sweeps, well, you want to see it reclaim immediately. You don't want to see on any of your alts price action like this, where you come below, then you start accepting, because that's then likely to lead to lower. Instead, you want to see if there is a sweep, you sweep it, reclaim, and come back up higher. But we'll dive into that lower time frame stuff later on. The point of showing these four charts is so that you can look at whatever altcoin you're trading in the coming weeks, whatever crypto coin or even Bitcoin, and just understand that if your coin has taken the low from this FOMC candle, that is a sign of weakness because the rest of the market hasn't needed to do that. It's found demand such that it's trading above it. So that's a quick note. Overall, we're consolidating. We're above that FOMC low. That's going to be a key level to watch on all the coins. And then, of course, the respective high. So watch to see which side breaks first on the majors, on Bitcoin, Sol. We also have the Total 3 index here. So that's going to be all your altcoins. So what we've seen on Ethereum is actually, it is compressing high time frame. So like this. And like this. We're in that high time frame compression pattern. Mark that out in orange. On Solana, we have been trending. So we've broken out from these highs already. So Solana definitely has short-term momentum. Ethereum is building up energy for an eventual big momentum move, whether it's to the upside or downside. And generally, the altcoin market, the wider index, has broken out from its recent compression. So again, something you have to do with all your altcoins. Look at them compared to these charts, compared to your majors, compared to the index. Are they above their respective compression here, like the index is? Or are they consolidating in a high time frame compression like ETH is? Because if they're not, and if your altcoin looks more like this, where it's actually trading below, again, that is a show of weakness, and it doesn't mean it needs to go to zero, but it does mean that in the week ahead, it may not have the best chance of upside, and opportunity cost is everything. And of course, this is the weekly ledger. We're looking at the week ahead. So mini lesson there on trading your altcoins. Now, if we look at Bitcoin, gold, S&P, and the dollar in reaction to FOMC again. So Bitcoin and stocks, they have not taken the low from FOMC. You've seen a stronger reaction on stocks actually closing right at new highs, whereas Bitcoin, of course, is still way off of its highs. Gold did take its low from Wednesday, which is a great sign to see for the narrative of gold cooling off here and having some sort of consolidation. That's going to allow Bitcoin to have some flows and potentially outperform. And of course, the dollar is way off of its FOMC low, has come nowhere near it, which of course urges some uncertainty. However, the fact that we have uncertainty while Bitcoin looks like this, it's trending up with higher highs and higher lows, it's consolidating within an uptrend. The trend is your friend, so that dictates that price should go higher unless we see a trend reversal, which only occurs once we start closing below these lows. And if you want to use closes instead of wicks, then you can say this low over here. That would denote a trend reversal, as that is breaking the market structure. But for now, it's in an uptrend. It's consolidating. Yes, stocks are breaking out. Yes, gold high time frame has broken out along with stocks, and Bitcoin hasn't. But that uncertainty during a rally which has bullish structure is what actually can potentially lead Bitcoin to having further fuel in its rally. And therefore, it's the same question I've been raising for weeks now. Is Bitcoin just weak here, or is Bitcoin simply just lagging behind and its move is going to be a bit later on after gold and stocks do some consolidating? That is the question. And at the moment, trend is your friend. While we're simply in this consolidation, the direction of the trend is up until you see that trend reversal sign. So super simple. Now, taking a closer look at Bitcoin here. The monthly candle of September has been a pretty positive month, despite September on average having pretty poor returns for both Bitcoin and stocks. So interesting to see. Of course, we still have 9 days left, but if we can start pushing above this open of August, then potentially it sets up a move to at least test the upper end of this wick from 120 to the high at 124.5, let's say. Much like we did here in January last year, even though it was in the end bearish, whether it's going to be bullish, like this example here, it's very likely that once you start getting above the close, you go for a test towards the highs to see if sellers show up or not. So we've got a big week coming ahead as we go into the end of September. This week is closing flat, so a bit of an indecision week. Although potentially going to close green here, we've still got 5 hours. So it's really interesting to see what happens in the coming days and weeks. Of course, everyone's expected big volatility on the FOMC week, They've not got it. So now traders are getting confused. They don't know what to do. And that can sometimes lead to more chop, more consolidation before the eventual breakout. And when we zoom in to something like the daily, very simple, as I said, you can look at this Bitcoin range from that low to this high. Let's see what breaks. Now, of course, can we sweep out all these lows and reclaim? Yes, that is still a perfectly valid bullish path that I think would lead to a move to 120. Can this instead be a higher low? Yes, as well. We don't have to even sweep Friday's liquidity necessarily because we've already swept out Saturday's liquidity. We could just have a nice move potentially on the CME Open tonight and form a higher low. All that matters is we don't have the opposite scenario where we fall below this low and then start accepting that, because that almost definitely leads to a move back down towards 110k, even if that is going to be a higher low. Or of course, if it's going to be bearish, then potentially that leads to a break lower in this overall weekly downtrend that we've had here since this sweep that we got in the summer. So that's really what to look for in Bitcoin this week. Of course, once we break the high, you want to see it close above, and then we're looking at the reaction to 120k. Of course, can we cleanly break above it and retest it as support? That would be very bullish, but more than likely, we're going to initially reject it, and from there, from that rejection, you want to see, does Bitcoin hold up and consolidate and accept at higher levels? That is as simple as the markets can be at times. You're just looking at where is Bitcoin accepting. And while it's accepting in this consolidation, as I said, we're in an internal uptrend within a higher time frame range / consolidation. Therefore, trend is your friend until you get to the upper end of the range, which is 120k, where you then say, okay, this is where potentially resistance could show up. And then you react from there. You can look for reversal setups on the other way. And until those reversal setups come, you stay long. The trend is your friend for potentially even new highs. Who knows? But overall, that's the way to play it this week. Between this range, sweeps are okay, but price needs to reclaim fast if we do sweep that Monday low. You don't want to see price accepting below Monday's low, because that more than likely leads to a move back down to 110k. So that's what to look for from here, either higher low or a sweep. Now, when we take a look at Ethereum, what are we seeing? Because it's a very different picture on the ETH chart. As I mentioned earlier, you've got this compression pattern on Ethereum on the high time frame, where it's really making these higher highs and higher lows. Price is getting less and less volatile, and as you all know, this is cause and effect. Price is building energy. It's building a consolidation for almost 40 days now. And when you're getting that drop in volatility, eventually it's going to lead to a big expansion in volatility, because it's simple. Retail traders, dumb traders, they get bored during all this chop. They check out, they lose their minds, they get long at the highs, they get short at the lows, get absolutely wrecked. They don't know what to do during this price action. But that's when smart money are either filling their sells and filling their shorts and hedges, or they're filling their longs, they're filling their buys. Now both is happening at the same time. It just matters which side wins. And if we can start breaking out, then the accumulation wins and you can have trend continuation higher, much like you saw after this consolidation, leads to a move higher. So the same again, you just want to wait for a clean breakout, and from there, momentum can take over on your trades on ETH, but it has done multiples here, so safe to say that a lot of the move is now behind you on ETH, and we're already seeing markets have been rotating elsewhere since it swept the all-time high. And make sure to check out one of my morning markets videos this week. Done a bunch of deep dives this week on rotations, how it works between liquidity. Absolute banger. I won't cover it again, but don't miss that one. Go back and watch some of those morning market videos that have those big, long, deep dives. I did 2 big videos this week, over 30 minutes, that dive into all of the rotations in the markets and how this cycle is really playing out with the dynamics of profit taking and rotations into altcoins and how it's different from last cycle, because it is totally different. But essentially, since Ethereum swept its all-time high, the markets decided to rotate into Solana. So looking at Solana, it is now heading into its own resistance, where we have some key levels here before this all-time high. So it's really clear Solana has now created a weekly gap here, and this weekly gap needs to hold for any continuation higher. That's how you have to treat it on Solana. As soon as this gap fills, that is your invalidation, because you're likely to fill in much of, if not this entire rally since April. That is your gap up. You shouldn't let traders who didn't get positioned on Solana around 200 because they were too scared, or because they simply didn't have a system for it, because that gives them a second chance to get back on board. And when you give everyone a second chance, when you give dumb money a second chance, that's not a show of strength, that's a show of weakness. Instead, gaps form because price is so bullish that it needs to mark up, and it shouldn't have been trading below there. Therefore, when you go to your lower time frames, click something like the daily, super simple. If we do get choppy on Sol and we do form a consolidation here, you just, as long as you see that gap hold, you can wick into it briefly. Key thing is, you just don't want to see that bleed into the gap, because any lower high is then going to likely lead to further downtrend to take out all of this liquidity here, and the move is over. But that gap, what it should do is show strength. And if we put on something like the impulsive candle indicator, there's not actually any high volume impulsive candles here, which is interesting, whereas we saw some earlier. But nevertheless, this gap should be strong and should be where traders support the trend. But before then, we do have market structure here on the daily. And we do have a low and a high over here in this consolidation, which you want to watch out for in the coming days. So similar to Bitcoin, do we have to see sweeps below and reclaims before moving higher? Do we even form a higher low before moving higher? Perhaps supported by these daily 12 and 21 bands, which have been supported so many times here on Solana, producing new highs throughout this entire rally. Therefore, you want to see more of the same wherever these bands end up going. So that might look something like this. You see the 12 band move briefly sideways before coming back up. And again, that can be met with a sweep. That can be met with a higher low. What you don't want to see is price really break, lose the bands, and then just start that bleed into the gap and start generally just trading in the gap. So again, what's the theme here? You don't want to see acceptance in areas of weakness. You want to see acceptance in areas of strength, like after a breakout. If breakouts are going to continue, then price needs to accept at the new level it broke out to And if it accepts there, then it will try mark up again to find out if it can accept higher. And eventually the markets won't be able to accept higher, and that's when the trend ends. That's how simple markets are. It's all about price acceptance, which I have a full module on. Deep dived in the auction market theory. Recommend checking those 4 lessons out. You can see it in the pinned message in my channel. Got a bunch of trading lessons for you guys that I've made that give out multiple free winning strategies and ideas for your own strategies. So make sure to check them out. They give you a great understanding on how markets really function. Now, moving on to an interesting coin, which has been BNB, one I mentioned. If we actually take this chart here and go here. I laid out all of these round number levels for you guys in morning markets. And we've seen BNB continue outperforming and break out again towards now the 1,100 level. So we can mark this out. As you can see, price respected 800 before dipping down, briefly broke above, but then the second time it broke above, we then got to 900 where it rejected, broke down. During this time, it held those daily 12 and 21 EMA bands on the pullback before breaking above 900, led to 1,000. Initially rejected, but now we broke 1,000. That's led to a move, at least an attempt, towards 1.1k. So very interesting. And the reason it's interesting is because we're getting into the point in the market where you're seeing these rotations that are becoming more and more decorrelated. So notice how Solana had its big move while BNB was really only just pushing above its high. Solana was instead going parabolic, pretty much vertical. And then notice as soon as Solana topped out and consolidated, well, that's when BNB went on its own vertical move. And you can look at Ethereum. Notice how during Ethereum's parabolic rally over here, BNB was literally just consolidating. And then once Ethereum topped out, that's when BNB went on a big run. And then Ethereum broke out over here on this candle, while BNB was simply below its high and consolidating. And that's when Ethereum then made new highs, BNB continued consolidating, and then once ETH topped out, that's now when BNB has gone on another major run. So you're seeing this decorrelation between altcoins get bigger and bigger. Notice how the decorrelation was less of a magnitude here, and now it's much bigger of a magnitude where you're just seeing an absolute rip on BNB while ETH literally goes down. They're literally negatively correlated. And that's because we're getting in this stage of the bull run where you're seeing rotations between coins in a very noticeable way. When certain altcoins consolidate, other altcoins are using that time and period to gain the attention and have their own run. Because they can't all run at the same time. There's not enough liquidity, there's not enough volume. So when one asset consolidates, the other starts running. And over again, these musical chairs are playing. So something interesting to know. Now, of course, you can't track every single altcoin. It's not a game of Pokemon. You're here to specialize and trade a select few of assets and also have an understanding of how to generally spot your outperformance in altcoins, which I've been teaching you guys how to do. So that's something to mention. Next up, I want to quickly talk about the Russell 2000. So these are your lower time frame stocks. So actually get this one. So lower cap stocks have made a move to their all-time high. This is pretty big. I mean, the last time they met this level was at the top of the bull market, so November 2021. They briefly came towards it in the big altcoin rallies during Q4 2024. And now again, they're hitting that high. So this is really a sign of risk appetite from traders and investors. So you want to see this chart actually break cleanly above this level. That's going to lead to altcoins, your riskier assets, having the green light, showing that investors are happy to risk more. However, if you reject this level, something like this, then it's more likely to need more time to cool down on your high risk assets. So super important, and actually will give us a good insight into what stage we're getting into in the bull market, because of course the more and more this pumps into price discovery, as it did here, the closer and closer you get to the top of the eventual bull market as traders long their longs and get long on the super risky stuff. So these levels are very, very important. As I said, marked a major top last cycle, marked a big local top this cycle here. So again, are we going to find resistance here, or are we actually going to break out in what should be those bullish months, October, November, December, on your altcoins, on your risky stocks? That could set up one of the better periods to trade, especially as an altcoin trader, and would fuel the narrative of a potential bigger alt season than we've seen so far, because what we've seen so far is this musical chairs of just selective assets rising as opposed to the majority of the market rising. So definitely keep an eye on this chart to see what investors are generally thinking regarding their risk appetite. So that is the full market recap. Now let's move on to catalysts and risks. So we have Deribit options expiring coming up. This is the last Friday of the month, and it also is the last Friday of the quarter, where we have 17 billion, I believe that is, of notional value in contracts set to expire. And the big levels are 115k, which we're currently above, and 120k, which is slightly above us. Then we also, of course, have 125, 130, and 140 is the biggest level. However, we're stuck in between 115 and 120 at the moment. So that's really going to dictate how Bitcoin moves this week, especially as we get closer and closer to Friday. So you could actually see the biggest moves on Bitcoin this week be Monday, Tuesday, or Wednesday, because when we get closer and closer to Friday, it's more likely to stay pinned between 110k, 120k, and 115k, sorry. So let's mark these levels out here. We have 115 and we have 120. So you don't want to see price go below 115 at all, and that confluences with my early analysis where you don't want to see closes and acceptance below this low, because that would denote a potential trend reversal as it invalidates the market structure and breaks this consolidation, and that aligns with the Deribit's OPEX levels. So market makers, people with calls, are going to be incentivized to hold that 115k level so that they are in the money, and potentially push towards 120k. But if we do push towards 120k this week, I would firmly expect that to reject. Because again, people are incentivized to actually not put those calls in the money because market makers are hedged and they take the other side of that bet. So the closer and closer you get to Friday, the more price will stay pinned between these two levels. And of course, between those levels, you also have 116 with a fair bit of notional value, and 118 has a little bit of value, not much. Really, if you break 118k, you're pretty much set to go to 120. And of course, if there's huge volatility and we break 120, then that sets up a move to 125, potentially even 130, but unlikely to happen, as that's what happens around OPEX. You stay pinned between the big walls that are closest to you. So you got 115 and 120. And once you start flipping the interim levels of 116 and 118, then set to go to 120k. And that aligns with the low time frame analysis of Bitcoin. So this is a chart I've been sharing you guys for a while. We have the value area low, we got the POC and the value area high. So we're just consolidating on Bitcoin. This weekend hasn't broke down, also hasn't broke up. So I think that's a good sign. A lot of the time when we do rally massively on the weekend, it actually just sets us up for a dump. Therefore, the fact that we're just consolidating and we haven't broke any lows on the weekend is actually a good thing in my eyes. And hopefully, whether it's after a sweep or whether it's a higher low, sets up a move for this value area low area to hold. And we get back to the POC, in which we should then look for it to break and flip, which sets the move to the value area high, where we will reassess. The risk right now is losing the value area low, as I said, and accepting, because then you have a break of the value area low, retest, a move to the POC, which then rejects. And if we then lose the value area low, that actually can set up a bearish setup where you find resistance at the POC, and that actually sets up your downtrend. So value area low, want to see this level generally hold, which confluences with all the levels that I've explained previously. So that is very key to watch for numerous reasons, whether it's OPEX, whether it's the market structure, whether it's the volume profile. We can see these levels are all converging together for multiple different reasons, which gives them more confluence, because that means more traders are looking at them. You've got options traders, you've got market structure traders, you've got volume profile traders, all basing their analysis of the same levels. So they tend to then have more respect. So that is the Deribit OPEX levels. Keep an eye on them. Again, expect price to stay pinned between 115 and 120. If we go below 115, then that sets up a move for a flush. If we can't, of course, reclaim it. And if we even get above 120, that sets up a big move towards the highs almost indefinitely. But the expectation is for both to reject on any move towards them until Friday OPEX is over. So we have Powell speaking plus core PCE inflation. Not much in terms of economic events. We of course had the big one already, FOMC, but there is some inflation data on Friday which could provide some volatility both ways. But overall, not a big week in terms of economic events. It's really those price levels and the options expiry that's going to be more of a potential catalyst or risk. So moving on to trade of the week. Now this was last week's trade of the week. It's been playing out pretty decently. So we got long around 114.9. It's moved up to the POC and now come back down towards the value area low. So again, unless we start closing below the value area low, closing below those daily bands, this setup looks good for higher as we're just consolidating within an uptrend. until we see that sign of a trend reversal where if we close below, then we can look to reassess and potentially close it early, as that could set up a move towards 110k or even lower. But while that value area low holds, we could look to a move where we flip the POC, hit the value area high, and potentially we reassess and look for what will happen beyond there. But trade of the week is just holding the same trade from last week, not adding any other risk or swings. This one's enough. And it's yet to be seen which signal we get next. Is it a break below the value area low, or do we now hold it and push towards the highs and break out from this consolidation? So these are the paths I'm looking at. Of course, red path will be bearish. That's losing the value area low and accepting below it. That likely leads to a move to 110. Or if we start to form some sort of high low or sweep, we can see a move towards the POC, towards the highs of this consolidation, which sets up a breakout towards the value area high at 120k, which from there we'll then look to see if sellers are again showing up at this level. So that is the weekly outlook. Hope you guys enjoyed this one. I'll see you in the next one.